Bismillahirrahmanirrahim. Right, let's continue with limited liability company formation. Now, this type of business has legal protection, and this has legal recognition, and it has a artificial personality, which has much different to your sole trader and partnership style of business, which has different features actually. Now, the shareholders are the owners, but have limited rights as shareholders over the day-to-day running of the business. Now, in limited liability company, you may normally find directors, and these directors are, if you look into a huge company, they are not the shareholders. They are just appointed employees. But for small companies, more than 90% of the time, the shareholders are the directors of the company. They will do day-to-day management of the business. But as the business grows, the shareholders are also human beings. They all have limited capacity. So based on their limited capacity, they can't go on to manage everything. So when they try to do this, many organizations collapsed. When single owner, let's say I have only this training center here, fine. Now next month I open another branch in Doha. So weekends I come here, weekdays I go there, fine. And then I open one more branch in Alcor. Then every weekday night I go there, weekends here, weekdays there. Then I open one branch in Umside. So if I try to keep on doing like this, and if I am only one who is trying to manage everything, all branches which I open very soon collapse. Guaranteed. What you then have to do, you then have to subordinate. You need to bring good people who should manage the business on behalf of you. So they are known as directors. As the business keep on growing, then you need to bring better resources who will manage the business for you. Top management, exactly. So there are different conditions. They must be skilled, they must be educated, they must be qualified. More than everything, they must be trusted. You should trust them. Trust is the most important character
between the owner and...
Exactly. Otherwise, owner may sleep at home. This person whom we depute, he might cheat the owner, and then later owner may not know anything. So the person who appoint to manage the business should have these kind of capabilities. From a professional point of view, we don't speak about trust, but in realistic life, that's the very important underlying criteria. Anyhow, so the board of directors are appointed to run the business on behalf of shareholders. In practice, they have great deal of autonomy. What do you mean by the word autonomy? Any idea? Word autonomy? Autonomous. Automatic. Tell me, what is the meaning of automatic?
Automatic means it happens when it is on.
It is on. So this word is also connected to automatic only. Now I have a remote control car. Okay, I wind that and I keep there, and I stand here. The car is going. Am I doing anything?
No.
I only did what? At the beginning, those days. Now we don't have this wine, that type of toy. No, we are winding it maybe for 1 minute, 2 minutes it will operate. So at that time of operation, you are not involved. That is happening on its own. So that is automatic. Autonomy means you are giving complete freedom to the person who is managing the business without you are putting your nose and interfering on it. I appoint you as the manager of the company. Every 1 hour I come and check, okay, let me check your drawer, let me check your file, let me check your pocket. If I keep doing this, can you do this job? No. So that's what we say, that great deal of autonomy. Now who provides the capital? Shareholder will provide the capital. So shareholders should receive what in return? Dividend. The directors must receive what? Salaries. And in addition, the directors also may expect to receive bonus, increments, incentives, monetary and non-monetary benefits, car, housing, education for their family and kids, so on. But the shareholder, he will receive dividends. And who is the ultimate responsible person for the result of the business? What do you think? Who is the
Shareholder.
shareholder only?
No.
Shareholder same like mother. The founder shareholder is same like mother in our home. When dinner or lunch is cooked, a family of 5 or 6, and if that family is running at a bit of a tight situation, I think we all of us would have experienced, our mother won't eat until all others finish their meal. I hope you all have the same experience. And sometimes mother will pretend enough of food is there, but nothing will be there. Same story with the shareholders. If you don't have distributable profits, the shareholder cannot take dividends. But if you have enough profits, that's why some mothers are fatty enough, eating all the remaining food at home. I'm just joking though. So, if the distributable profits are big, the dividends are very fat dividends. Understand me? But employees, can you say that, okay, my friend, this month profit is very less, so you take less salary? No, no one will accept. So his mindset is, end of the month, my salary should be like this, and then I will contribute to within the conscious of halal and conscious of legal arrangement. He will do whatever the job is. Clear? So, the reporting requirements in limited liability companies are much stringent. The word stringent. What do you think? What is the idea behind that word? So, sort of very, there's a word in English, cherry picking. Heard the word cherry picking? When you have to pick the cherry, you can't pick the cherry as you picking apple. Cherry is a very small fruit. If you make a small mistake, that cherry will get squeezed. So you get to pick one by one, carefully. So in dealing in business activities, the word cherry picking meaning you are very too much careful. You go into the bottom of the detail. So stringent means very strict conditions. You have to comply with company's law of that country. For example, we are in Qatar, then we need to comply with the Qatar commercial law, number 1. Number 2, we need to comply with IFRS. Number 3, we need to satisfy the auditors. Then they will look into see whether are we complying with international auditing standards when we presented our financial statements. Likewise, so much of different regulation to be satisfied. That's what you meant to say? Where is that word? Stringent requirements, right?
After BA.
Yeah. But for the sole traders in the partnership, Kalivali. They don't worry. My car, my petrol, and then anyway I prepare my financial, no one is there to see. And be registered at company's house. In UK company's house, in any other countries, the registrar of companies. In Qatar we have this Ministry of Commerce and Industry. In Sri Lanka we have Register of Commerce, Register of Companies, ROC. Here MOCI. So different countries have different names. So you need to be registered with them. Complete memorandum and memorandum of our association and articles of association. Do you know what it is? Acca. So you need to have an Acca. To have one sigil, they're very important. So that's there. Have at least one director, 2 for a public limited company who may also be a shareholder. Minimum 1 director must be a shareholder of the company. But if it's a public limited company, 2 of them must be shareholders. Have its financial accounts are audited. Larger companies only, meaning to give a different criteria, the company which has revenue, it's in UK terms, huh? Revenue of exceeding 500,000 pounds, and it's a limited liability company, then you should audit by chartered accountants. But in other countries, if it's limited liability company, there's no question of revenue, it should be audited by chartered accountants. Distribute the financial account to all shareholders. So that is that. Let's try this question. Can you please try that question? Everyone has the question, right? Do you want me to share? Yes, shall I send it to you? The question you want? There is some more. Oh, here also. One. So, I'll share this also. What do you think the first one is? First statement, correct or wrong?
Yeah, correct.
What do you think, Yasser?
True.
Yes, Mr. Adil.
Two chances I guess.
You have two choice. Yeah, Mr. Bhavni.
It's true, but confuses legal and professional requirement.
Yeah, legal requirements is according to company law.
Yeah.
Professional requirement is according to IFRS.
Yes, true.
So it should be true. What about the second one?
True.
Sometimes false.
True?
False sometimes.
Very important word is
Sometimes.
sometimes.
Yes.
Mandatory. You have to submit to register of companies. Employees always receive the company's accounts and an employee report. What do you
No,
think?
false.
False. Tax authorities receive as much supplementary details as they need to assess the tax payable on profits.
Yes, true.
And what about the last one?
False.
What is the last?
Bank record
Yes.
require more information than is subsequently published.
Yeah, then because otherwise they will not give the loan, they will keep on ask additional information. So is that clear? Right. We studied the business entity concept already, right? So we don't need to discuss and spend time on this. So that what it says is that the owner and the business are two separate and distinct persons. So governance. What is governance?
Control, maybe? Control?
Control. What do you think governance, Adit, what do you think? Is it something legal mandatory requirement?
Governance.
You can say compliance.
See, I will talk about enroll. I think I spoke, did I? We discussed enroll. What is enroll? Heard of the word enroll? Enroll.
Enroll means registering.
No. I will write the word.
Enroll.
Heard of this? Enroll is a company. Hmm. Yeah, we talked about this, right? Enron is a power generating company and then
It's collapsed.
collapsed.
Yeah.
And until the Enron collapse, governance was not a very frequently spoken topic. People were not bothered about governance. To tell a simple example of governance, we go to masjid. When we are about to pray together, we respect people. We give chance and we don't rush. We behave in a more mannered way.
It's corporate though.
It is sort of governance. Forget the corporate, word corporate. Let's say we are waiting outside near the place where we want to take wudu. There are a crowd. We are not going to, I'm the one who came first and I'm going to take wudu. We don't do that. We wait for turn and we find others are doing like that. So it's more of a internally developed governance that we have. How we behave people in the office, on the road, when we are driving, giving ways to people. So these are sort of discipline. But these disciplines are not legally monitored. Now I think now in Doha, if you cross the road without the zebra crossing, I think it's a legal punishment. But those days I don't think it is. Those days it's just you have the yellow zebra crossing, but people can even crossing from other area. That time, a man crossed. Now let's say this is the road. You have zebra crossing here. This man is here now. He could easily cross from here, but what he does is he comes all the way here and then cross and then comes this way. This is the governance what I am talking about. In our professional business also, we have governance. Meaning, when you talk about organization or business, we add the word corporate governance. The way in which our business is managed in the best way. The system by which our business is best managed is what the governance is. So, coming back to the question of Enron, up to I think it is 2001. Enron issue came in 2001, if I am not mistaken. So, until that time, people are not that much worried about this governance. But what really happened within the Enron organization, it was not properly governed. There is, you have an elder brother and younger brother. If younger brother is smoke, when he sees the elder brother, he will try to hide. Am I right? So when the younger brother having a thinking, no elder brother watching me, then I can do whatever I wanted to. So there is English saying, big brother watching. So in Enron, that time, that big brother watching concept was not there. There was no such internal audits, there is no such review, there is no such monitoring. It was like anything as the CEO what he did. And financials he prepared, Arthur Anderson blindly signed the financial. Then what happened finally? Some shareholders got a doubt, went to courts, file a case, and then court ordered to liquidate the company. Not only liquidate the company, also to liquidate Arthur Andersen as well. They uprooted Arthur Andersen from the complete auditors register in the world. So you can't have Arthur Andersen anymore. That's why ENY, KPMG, Pricewaterhouse made big business. Because the clients and the staff, they have a thought. So anyway, that's leaving apart. So then a law introduced in US, Sarbanes-Oxley, SOX. In short we call it SOX, Sarbanes-Oxley. This is two people, Sarbanes and Oxley. Together, they developed a sort of a law to behave in the way it should be. So the corporate governance became a mandatory requirement.
We have something like this here in Qatar also, right?
Yeah, now it's here, yes. Governing body, governance, governing council, so much of things are there now.
Some auditing like this, we have this registered in our letter pad also. I see this.
So, the governance, therefore, is the best way of doing things in the business. For example, if you are purchasing something, you have decided to purchase. If the organization is big, you cannot just as you like to choose a supplier. You got to go through several procedures. You need to have a tender committee, and then you must have a tender meeting. Then you need to invite tenders, or a bidding process, or a committee must be there, or quotation must be called, and that must be reviewed, and competition must be there, and that the bid should be opened in a very independent way without any bias. The purchasing man and the supplier has a relationship. So under the table deals cannot happen. So these type of activities must be monitored and governed in the business. So those charged with the governance of a company are responsible for the preparation of the financial statements.
ISO, something like ISO?
Yeah, ISO is different.
What is this one?
International Standards Organization. That's related to quality.
Okay.
Yeah. So now before we say that financial statements responsibility is with the management. Now we don't say management. We use the word those charged with the governance.
So when it comes to governance, it is not. It is an external.
No. Within the organization
You can
only,
say as
a superior body,
Yeah.
more than the management. There could be management, but they have more powers. I don't know whether you all heard about the word audit committee. There is a team called members from the board of directors who are separately designated as audit committee. They are responsible for financial statements. They are also responsible for recruiting auditors. They are also responsible for reviewing the financial statement. Then they are also responsible for confirming the activities are happening as per the required controls. Understand me? So that's all the governing body is. Now what is corporate governance? It is a system by which the companies and other entities are directed and controlled. I pinpoint, okay, if you to open the door, you must knock 3 times. Then if someone is only knocking 1 time, he is punished. That is according to corporate governance. Understand? So this is what the very summary of that.
Basically, it is like ethics.
Ethics. Another good word is ethics. Let's say on the road you are walking, we see that 2 people are talking and waiting. We should not be crossing them and walking. No? We should take a turn and then we should go, or we should wait in distance, or that's the ethics that cultured to us. That ethics only we are talking here. So there's a business ethics. So do you all need notes on this, or is that okay? What do you want me to do?
Okay, notes. This is
Yeah.
follow and do check.
How about you? You want to write a note?
Already in
Already here. No?
Yeah, exactly. That's what I wanted to say. So now, legal responsibilities of directors. Directors has some legal responsibilities. So these are the responsibilities. Act within their powers. You must not be trying to act more than what you are supposed to. Act within their powers, promote the success of the company. You should work for the betterment of the organization. Exercise reasonable skill, care and diligence. Why we use the word reasonable skill? Any idea? Now let's say you hire a pilot, qualified, experienced pilot. And do you think he will not commit any mistake? Can you say that? No.
There are chances.
There are chances. So it's not that 100% perfectionism, no. That's why we say that reasonable.
So what maximum he can give?
Yeah, best. He is also, we need to factor that he also a human being. So reasonable skill, care and diligence. Diligence is like, you being very, very attentive, very duty conscious, very detailed like that. And avoid conflicts of interest. So what do you mean by this? This type of situation. There's no, you should not be part of that politics. You must always try to avoid the conflict of interest. Sometimes one employee may have two bosses. Whether to report to him or to that we call it matrix. Like this. This man is here. He has a boss here, and he has a boss here also. This we call it functional. This is operational. He's a let's say finance accountant. He need to report to the group finance controller (GFC), and then he need to report to the branch manager. He's working in one branch as an accountant for that branch. So he should report to the branch manager, and also he should report to the entire business group finance manager, controller. The finance controller may have different expectations. In the meantime, local branch manager also will have different expectations. Then this guy held up. So then there could be a possible conflict of interest may develop. But as a director, you should try to avoid those conflicts of, you see, in directorship, you have director finance, director marketing, director HR, director production, director, so much of different designations. So in a boardroom, you may have this type of dispute might develop. You always try to avoid this. There is a word in our other subject you will study. Goal congruence. What do you think? What is the meaning of this word? Any idea?
Goal is the normal goal.
Football goal.
Or achievements, like we have some goals.
Let's say this is our office. That room finance, this room marketing, that room production, this room inventory or warehouse. And if you now think only that room is one entity, the finance entity, finance department, you just think they are only single entity, nothing to do with others. So when they are working, what is their mindset? They want to show their performance. Their performance is to do best to the finance department. Am I right? Likewise, the marketing department, what they will try to do? If they assume that we are the only organization here, they will try to do best to the marketing department. Same production department, same warehouse. Now we connect. Now we are in single roof. For an outsider, this is the organization. They don't care you have a finance department here or a marketing department here or a production department here. So from an outsider point of view or from owner's point of view, we need to do best to our organization at all, as single. Now what could happen? If he try to do something, he is trying to introduce a new control. Then the marketing people wanted to give gift to customers. Let's say the gift is they are planning, they are saying that gift cannot exceed 200 riyal. But this marketing team says, to convince that good customer, I need to pay 1000 riyal. Then do you find the issue that both of them have a problem now? They develop a problem. If he allows more than 200, his performance goes down. If he accepts only 200, he might not get that customer. His performance goes down. Either his performance goes down or his performance goes down. Individually, this department worries about whose performance? Individually. Their performance only. They also, their performance. Now, we need to collect and connect and make one single entity. Owner's point of view, whose performance is important for him? Or entity's performance. The owner cannot say this or that. Owner has to say the entity's performance. So sometimes you have to forget your personal interest, your personal performance. You should work for the best of the organization. That's exactly what goal congruence is. You are a marketing guy, I'm a finance guy, I don't care. No, it's not that. Come friend, we work together. We'll try to produce something best to the company, and the company's performance coming better, then later, that is good for all of us. That is goal congruence. There is an opposite word for this also. Sub-optimization. I don't care what you are doing. I don't care what the company is doing. I am only worried about my department. I will never allow you more than 200. Kaliwali. Anything can happen. Even the shake can come. I don't care. So that type of mindset. Ignoring the overall business interest, only looking at the personal interest is sub-optimization. Whereas this is the right opposite. So, now what we are saying is that
Those are topics, questions will come.
definitely true, false type of things can come.
So you can give notes.
Okay.
This
Then-
can also happen when relatives works
Yeah.
in a company.
Hmm.
So, if relatives are difficult to take
Yes.
decision.
Correct.
So politics.
Politics is always a big issue in several organizations.
So that,
So you can write it down. Goal congruence is where goal congruence is where every member of the organization ignores the personal interest of them
Personal interest.
of them
Goal
congruence and working for the
This is in here
no
also.
no that's not this
working
working for the best interest of the personal interest and working for the best interest.
Can you write please, because
Okay, I will. Every member of the organization, ignoring their personal interest and working towards achieving the best interest of the entity or organization. I will write entity, but you can also use the word organization. Is what the goal congruence is. Even sometime in this concept, you need to embrace the T-boy also. T-boy also contributing something to the company. But if you try to be sub-optimization, then you try to keep a big distance with him. You are just a T-boy, get out. But if it's a goal congruence, we need to keep with him and we work together. Come, my friend, come, we work together, you know. Then he even motivated to do better. Understood? So there is no that the work politics will not be there. It will be eroded, it will be removed. So the opposite word of this is, yes, you want to copy it?
yes.
Sub optimization. So exactly opposite of this. Ignoring the overall best interest of the organization and considering only the personal interest despite the result of the business. Despite the result of the business. So this is sub-optimization. Is that clear now? So that's all about this avoid the conflict of interest. Then not accept benefits from third parties. There is something called excessive hospitality. There's a word, excessive hospitality. Especially in the audit industry, when an auditor goes to client, this client tries to treat the auditor. That's not that common in Doha, but especially in our countries, auditor goes for like more than 3-4 days to stay with the client. They give hotel, they give food and everything. That time the client tries to treat him. I remember very well in one particular situation, it's a tea factory. So a team went to do the audit there. First day, the responsible person invited these all fellows for a dinner in a hotel. And he gave the best maximum possible treat, including liquor. So these guys had enough meal and liquor and all that. and next day morning they start the work. His guy's expectation, these auditors will not look into the serious matters and then they will just, pass by scenario. But the old fellows found a lot of problems with him. At the end of the day, a report came and then that guy got terminated. That's another story. Excessive hospitality should not be accepted. E&Y Doha, Ernst & Young Doha, any gift exceeding 200 riyal is not accepted. Someone is bringing you a gift, and if it is less than 200, you don't need to worry. But if it is more than 200, you need to go and report this to the partner. Look, sir, this guy has brought me this gift. What shall I do? Then they will evaluate this. So, to that extent, accepting, what is the problem here actually? Now, someone giving you a gift, there is a saying also, there is nothing called free lunch. If someone is taking you for a lunch, please remember there is an agenda behind. So, if you having a habit of accepting gift, then you then have to duty bound for him to do anything in return. After 1 month, you may receive a phone call. Can you please do this? Then you have no choice, you have to do this because you already accepted gifts. So that's why we say that not accept benefits from third parties. Declare interest in a proposed transaction or arrangement. What do you mean by this? I am a director of company X. So I am an employee. That's the scenario, right? But for company Y, I am a shareholder. I purchased 100,000 shares. Now, if you to work as a director, you should declare, you should say this to the board of this shareholders that look, I have shares in that company. Or even if you have investment, like you have purchased some fixed deposits, not the small amounts, big money, you have to declare, you have to present. Even you are proposing some arrangement for acquiring another company, you should declare that as well. Understood, sir? So, these are the legal responsibilities of directors. Now, the Companies Act 2006 is the principle that the purpose of the legal framework surrounding companies should be help to companies to do business. So, this act actually drafting the rules, especially for directors. So, when exercising this duty, directors should consider the consequences of decisions in the long term. It's not like things on a sudden basis. You also need to think about the repercussions in the long term. I'm doing something today, after 5 years what's going to happen? You as a director must look into that in addition to looking into the short term as well. Further, interest of their employees. You need to protect your employees. You as a director, you have a team. You should protect them as well. Need to develop good relationship with customers and suppliers. Obviously. I don't need to talk more on that. All of you, I hope, understand that. Impact of the company on local community and environment. Now, Qatar National Import and Export. Do you know this company? Q&A, Sadia. Like in 2012, 13, about 10 only, before, they have got a brand called Arla. Is that Arla? That cheese from Denmark, Puk cheese. That's Arla Foods. That's a Danish company. So they have signed up a joint venture agreement to do business in Doha. In 13 or 14, some nonsense in Denmark drawn one cartoon for Prophet Muhammad. Then big reaction came among the Muslim community. And everybody started, throwing away, retaking and then chasing and all that. So they had also a big problem. Now, if you are a director, you have to think about that. Impact of the company on the local community and the environment. It is not only the profit that you need to see, but are the repercussions going to come? Now I am still keeping this Puk cheese. and Danish product, and I cannot walk on the road. Sometimes they might kill me. Chances are there. So you got to be careful when in Sri Lanka, another case, halal issue came in as a big scenario. Now in India, habaya, face cover, or the what do you call that? Jilbab. So these are issues that you need to look into. In Pakistan, one innocent manager got killed. So as a director, you have also must look into not to happen these things, to protect the community. And we are doing business, yes, we want to make profits, indeed, but in addition to making profits, we also need to make sure the well-being of the local community. Also green concept. I hope everyone, now we have emails. At the bottom of the email, when some company is sending emails, they write this: unless otherwise it is extremely required, kindly avoid printing this email. This may save one tree. Isn't it? And also Doha Bank have done green run, long time back, maybe 5-6 years before. They collected all people and they have organized a marathon just to make an awareness of not to uproot the trees. In a different country, but still they have done this. So minimizing the printing, the A4 sheets are getting used less, and so that in turn those trees are protected. Recycle concept. The Lulu, is it Lulu or Bellagio? You can carry your own bags. So those are part of this consequence. Desirability of maintaining high standards of business conduct and a good reputation. Good business conduct. You are a businessman, yes, but you must do your business in the right way. And also, you should keep your reputation always. You should never take a risk to collapse your reputation. And they need to act fairly as between all members of the company. Now we talked about stakeholders there. So these members here are stakeholders. So when we are doing a deal, it is not only customers not only important to us. Yes, customers important to us. A customer coming in a huge lorry. Let's say he coming in a 12-wheeler truck and he is parking outside the neighborhood house. And that man, what he going to do? He will take the phone and call to the police. The police will come and then immediately impact is going to come to us. This customer may be from Saudi or from Dubai. He doesn't know. But we sitting here, we should understand. He is going to park the vehicle, so we should think about it. So these are some of the concerns that as a director you should have. Now, especially responsibility for the financial statements. That is general responsibilities. Now, when we now talk about accounting, so what are the responsibilities for the financial statement? Directors are responsible. Please remember this. This is one multiple choice question. Directors are responsible for the preparation of the financial statement of the company. I will even add another word here. Directors are responsible for the preparation and presentation. Not only preparation, presentation of the financial statement of the company. Why? Not only he prepares and keeping it here, he should take and present in front of the shareholders. So that job is to directors. So in a company, a accountant, a qualified accountant, he is the one who is preparing the financial statement. But any mistake comes, can you pinpoint him? No. You should pinpoint only the directors, if not the owner. Right? So, preparation of the financial statement of the company in accordance with applicable financial reporting framework, that is IFRS. We will study in detail later. The internal controls necessary to enable. What do you mean by internal controls?
Internal control. Employees.
Stop the video and then we will. I will take water and come.